Hello everyone, I'm Heather and I'll be presenting with Lauren and Ray and we are talking about our bank performance in general. And we are actually representing Bank 2. For starter, I hope that every and each one of you is safe and healthy. When we started quarter one, the economy was good and strong. The employment rate was low. As we moved on to the next quarter, we experienced that the economy was still strong and that Fed had considered taking actions to prevent the economy from overheating. During the third quarter, the gross domestic product revised down, and by that, it helped increase late payments from customers. In quarter four, the Fed took an action to support the market by lowering rates. For example, the tax rate decreased on all banks from 35% to 25%, and growth is projected to decline.
So now that we have some background on how the economy behaved this year, we would like to present our stock performance. This graph shows the price per share of our bank's stock over the year and the changes from quarter to quarter. So initially, we started with a price of $20.75 at the beginning of quarter one, and by the end of quarter one, we saw a sharp increase to $33.82. The price then increased again to $44.32 in quarter two. So during the first two quarters, our stock performed very well, but as you can see, the price per share started to decline in the last half of the year. Our stock did not perform as well as we had hoped in the last two quarters or as well as it had performed in the first two quarters. But we do have a plan to improve performance in the next year. Part of our strategy going forward is to buy back shares. So investors should certainly expect a boost in the price per share in the following quarters. Next, we would like to talk about the Basel Tier 1 and Tier 2 ratio of our bank. The ratio was 13.65% in the first quarter and began declining after that. It had a larger initial decline from 13.65% in the first quarter to 10.93% in the second quarter, and then declined again from the 10.93% to 8.8% in the third quarter. The decline from quarter three to quarter four was very slight, as you can see, from 8.8% to 8.22%. Although our bank's ratio gradually declined over the year, it never fell below the requirement of 8%. We do have a strategy to increase the ratio over the next year by reducing the amount of risk-weighted assets. So investors should also expect to see improvement in our capital ratios in the coming quarters.
So as you can see that our net income had dropped from quarter one to quarter after quarter one, and the reason is we mismanaged some of the operating costs, and so as we were moving towards quarter four, we had adjusted our operating costs, even though that our net income was still negative in quarter four. Net income increased from the previous quarter, and with the economy going a little bit bad at this time, and this actually helped our net income to decrease. And so yeah, during the third quarter, the GDP when it revised down and helped increase late payments for customers, which that helped our net income to decrease. And so as we can go forward, we plan to keep an eye on our operating costs, and we are doing our best by managing our operating costs. So we're looking at reducing the operating cost amount to increase our net income in the future.
So next, our loan performance for our bank. So this is our quarterly loan loss percentages. These graphs show our bank's percentages, our own bank's percentages, as well as the other banks in the market to demonstrate how we performed competitively. So in quarter one, we had a strong competitive performance and we had the lowest loan loss percentage of all the banks in the market. During the following 2 quarters, we did not have the lowest loan loss percentage, but we performed pretty average with the rest of the market. In quarter four, we saw our largest loss, and this loss was so big due to an increase in defaults and late payments from customers and corporate customers. And our lack of funds and our allowance for loan losses resulted in our bank experiencing a higher loan loss percentage than in previous quarters. Part of our strategy to mitigate this in the coming quarters is to more actively manage the provision for loan loss account and adjust it as needed.
So even though we had experienced net losses over the year, mostly from the middle until the end of the year, we still operated well enough to be the top three best performing banks. We are we are understanding and experiencing more wise decisions to the better to our bank. As I mentioned about the net income, it has been increasing ever since, and we expect to increase as we move on to the new year and new quarters. We expect to be among the top three performing banks, and our investors should expect the same as our management team is more able to make better decisions. And thanks a lot for everyone, and stay healthy.